Today, I'm breaking down 5 Indian companies with real fundamentals, solid balance sheets, and businesses built to outlast any hype. Every stock here is backed by consistent revenue growth, high ROE, low debt, and a decade-long competitive moat. Let's go deep, one by one. Stock 1. HDFC Bank Limited. HDFC Bank is India's largest private sector bank, 10 years of consistent profit and net interest margin stability. The 5-year CAGR profit growth is 18% and return on equity is 16%, which is a strong indicator of its fundamental base. The non-performing assets like loan or advance that are not generating income for the bank are less than 1.5%, which is one of the lowest in the banking sector. CASA ratio is above 44%, which is in the high category. CASA indicates the strong low-cost fund base a bank has through current and savings income. So the verdict of HDFC Bank after evaluating the fundamentals are a strong year-on-year returns of 12–15%, with low risk and steady returns. Stock 2. Tata Elxsi Limited. Tata Elxsi Limited is a leader in automotive engineering, embedded software and AI-driven design. Before we get to why this stock might be a hidden gem, let's quickly decode one powerful metric, ROCE. That stands for Return on Capital Employed, basically how efficiently a company turns every rupee of capital into profit. Return on Capital Employed is 40% for Tata Elxsi. That's elite. It means for every 100 rupees invested in the business, 40 rupees comes back as profit before taxes. Now add this. The company carries zero debt, and has grown its revenues by nearly 20% every year for the last 5 years. That's consistent, clean, and confident growth, the kind long-term investors love. It serves 3 explosive industries: electric vehicles, autonomous mobility, and OTT media, all compounding 10 to 20% annually. In other words, this is not just a tech company, it's a picks and shovels play on the future of AI, mobility, and entertainment. Stock 3. Tata Power. Tata Power reflects India's energy transition story in motion, from thermal to solar, EV charging, and with microgrids. In numbers, revenue growing at 15% CAGR, debt coming down, and renewables now form 40% of total capacity, and rising. The debt-to-equity ratio is about 1.4, which means the company has 1 rupee and 40 paise of debt for every 1 rupee of equity. Sounds high, but here's the catch, it's falling year on year as cash flows strengthen. And here's the real spark. Nearly 40% of Tata Power's total capacity now comes from renewable energy, and that share keeps rising each quarter. With India targeting net zero by 2070 and a massive EV push, Tata Power stands right at the center of this clean energy revolution. Stock 4. UltraTech Cement. UltraTech Cement is the backbone of India's infrastructure boom, powering everything from highways to metros to housing. A solid return on equity of around 17%. That's how efficiently UltraTech turns shareholder capital into profits. Its debt-to-equity ratio is just 0.3, meaning it's financially strong with minimal leverage. And an operating margin near 18% shows it's managing costs well despite rising input prices, a sign of real efficiency. Why you should have this stock in your portfolio is because UltraTech is the market leader in an industry that's consolidating fast. It has scale, distribution muscle, and pricing power, key advantages when India's infrastructure spending is only accelerating. Over the next decade, expect steady 10 to 12% growth, plus consistent dividends, making it a reliable long-term wealth creator. Stock 5. Infosys Limited. Infosys is a pioneer in India's tech story, now leading the global shift toward AI transformation and cloud modernization. Infosys boasts an impressive ROE of around 28%, meaning it generates 28 rupees of profit for every 100 rupees shareholders invest. That's efficiency at its finest. It's a debt-free company, giving it huge flexibility and zero interest burden. And with a dividend yield near 2%, It rewards investors with steady annual payouts alongside capital appreciation. Infosys combines stable cash flows, global brand trust, and a strategic AI pivot into long-term digital transformation contract. Over the next decade, it remains a core portfolio stock, globally respected, financially solid, and positioned to ride the next wave of tech innovation. The next 3 decades belong to India, an era of innovation, infrastructure, and unstoppable growth. And if you want to grow along with India, it's time to start learning, investing, and compounding the smart way. If you found this video valuable, don't forget to like, share, and subscribe to Mimo, your virtual finfluencer. We simplify finance, one story at a time. In the next video, we'll break down something every investor must understand. Mutual fund versus index fund, which truly builds long-term wealth.